Let's analyze together Super Meter Computers, but before that, guys, read the disclaimer right here in the video description below. What we have here on the chart is technical analysis from 2024 till today. We have almost 18 months of technical analysis, and right now it's trading sideways, and we're gonna actually load, the fixed range volume profile. It's very interesting because there is a huge accumulation process right here over the last year and a half, and here you can clearly see we are just in the middle, in the point of control. The point of control is the red line. So in theory, the indicator means that the price should be trading around that level because that's the most trading volume, and so right now we are just in the middle of it, but there is also a lot of volume right here below, which is also very interesting. So in order to make new highs, you are wondering probably if it's gonna make it or not. Here there is no resistance. That means that if we trade above $50, I would say there is no resistance. So it's very easily that we see a breakout above 50. It could be trading around above $100 again, because there is no volume around those areas. But right now we are still in the middle of it, right in the point of control where there is most resistance, and that's probably the reason it's trading right here sideways. It's like it's taking a while. So in order to assess if it's gonna make it or not, we had to go to the fundamentals, because the stocks are the stocks. This is not crypto. This is based on fundamentals. If they are making new highs in terms of net income, that's really good. If they are improving their net income, that's also good. So we actually load the indicator, the net income, which is probably my favorite one, and what we can gather here from from the chart is like the latest quarter hasn't been good. Actually 100 million net income is a big drop, but also we can compare it to the previous year, which is also very bad. We're talking about like a minus 66%, which is not good at all, and that's the problematic thing. We have a huge resistance, but also the net income is not good. So it's gonna take a while. We need something better than this. Currently, it's not it. So in order to assess that, based on past and present, is no good, but the future could be like the game changing, the story. So right here we have the EPS forecast at 0.44. And we had to compare the data right here. We actually, I'm gonna load the forecast right here because we have Wall Street analysts that they give, the forecast based on price action and fundamentals. And here, again, the average should be trading around the very similar level, just in minus 2% from current levels. And there is like one optimistic analyst that thinks that it should go back up, to more than 68%. Still, is $70 per share. It's not 120, But the most interesting thing is like the EPS forecast and revenue. And right here, we are at the worst possible scenario at this particular moment. But that doesn't mean that it's going to continue. And actually, the next quarter is not going to be good. But the next ones, after that one, they are going to be great. So obviously, right now it's turning sideways. But investors are patient, because they are waiting probably better results in the future. Based on this forecast, look at that. Normally there is a deviation, but not that much. So 2025 is not gonna be a good year, and that's probably the stock is trading sideways. But still, it's not making new lows or something like that. You compare the data between 2024 and 2025 right here, we're gonna have like a worst scenario in 2025, and still, you can see here, the stock has been trading higher in 2024, and than today. So the key question here is like, is it justified? Well, based on the forecast, it's kind of justified, because obviously we're talking about like a worst year, in comparison to 2024. But after that, that's going to be a different story. We're talking about like an EPS forecast by the end of 2026 of 2.90, which is like way better than 2024. And this is the interesting part, So obviously, I would say it's a buy, based on the technical analysis fundamentals that we have here. This is just my opinion, of course. But, obviously the key question is like when to do it, when to enter your position, because right now in this year, it's not going to be good. So obviously, you don't want to, for instance, buy right here and face like a minus 50% drop, So that's the difficult situation that we have here with the super mega computer. For the long term, it's good, but for the short term, it's complicated. So we gotta be patient, find the best moment. So I would say the best moment in terms of technical analysis is around $31 per share, which is a little bit lower than the current levels. But after that, based on technical analysis, look at the upside potential. If we get the number, that DPS forecast of by the end of 2026 That is gonna be in theory better than 2024. Look at that. Just in 2024 it was 120. So based on that, it should be turning at 150 based just on the net income, if it comes through, and that's the thing. That's the interesting part. We're talking about like a risk reward ratio. I'm gonna just draw it right here. For instance, you buy right here $31 and you get 170. That's a 450%, and this is realistic based on the forecast. So leave your comments below. What do you think about this? It's like, do you agree with this analysis, or do you think it's gonna be worse or better? Leave your comment below in the video description, and we talk about it in the next video. Remember to subscribe to TurnerST to watch more content like this, and thank you very much.